Welcome to Theo Trade. This is Don Kaufman. It's February 5th, 2025. Just over an hour to go to the cash close here on this Wednesday afternoon. The S&Ps, for the most part, drifting lightly to the upside, almost seeking, if you will, a catalyst. But really what the marketplace is about right now, and what we're going to describe here momentarily on this evening's video, is kind of a stuck in the middle with you on this marketplace. I mean, we're back inside of what can only be described as, the infamous volatility box. Again, I'm going to explain that and much more here on this Theo Trade evening video. It's right to work right now. So as I was saying a moment ago, the S&Ps are up 13. Look, don't really read into it. You know, one of the first things I love to kind of drive home. Take a look at the SPX with me here, and I'll open it up to a daily. And what you're actually looking at is, this line where I'm highlighting, that's kind of where the week started. So after a, rather wild start to the week, looks a lot like last week, right? We got a little bit of a bid back under us. But for the most part, on the week right now, you know, coming into this Wednesday close, you're massively unchanged. Like, yes, as I said, don't really read into it. And the marketplace right now is just, it's looking for catalyst. It's waiting, if you would, for like the next tweet. But all of it's for nothing right now. And clarity is very limited. And I mean that in the sense, when I'm talking about clarity, I'm like, where are we going to be a day from now? Where are we going to be a week from now? Where are we going to be a month from now? We're in, again, what I look at as a very definitive volatility box. And I'm going to start, and I was talking about this in the weekend update, but I'm going to go even into more depth about it right now because it's the ranges right now that define us all. So this is, again, 180-day 4-hour chart, right? 180-day 4-hour chart, specifically in the S&P futures. And what you can gather from this, and now I'm going to kind of zoom in just a bit, okay? This is the range. I said it kind of defines us all. Effectively, coming out of the election, marketplace pops to the upside and really hasn't done much of anything since. To give you very, very clear levels here, though, and that's exactly what I want to do is provide you very definitive levels of where you want to start watching, right from 5,900, okay, roughly speaking, to just over 6,100. Again, just big round numbers, okay, for this. And I think it's important that each and every one of us pay very careful attention to these particular levels right now, because when I start talking about, you know, we're back in the infamous volatility box, all the volatility box really kind of equates to is the marketplace kind of pinging back and forth within a given range. And you start looking at this is a $6,000 product. So you're inside of a, this 200-point range in a $6,000 product. Okay, right off the bat, that speaks volumes. Okay. But even more importantly, as I kind of redraw the box in here and we're pinging back and forth, what does it mean and what does it amount to? Well, what happens when you're inside of one of these volatility boxes, and over the years, if you tuned into Theo Trade for years, you've seen me talk about these before, when the entire marketplace, it's not just lack of direction, okay, in here. The marketplace is having a difficult time pricing the forward risk. So in effect, we just get pinged back and forth. And in this particular case, it's volatile, right? But what happens when we stay in this tight of a range for this significant period of time? When I say significant period of time, right here is November, okay? Here is December, okay? This is January. We're now into February. I mean, this is a tremendous amount of time to be in a 200-point range. What's actually going on, though, during the period of time is we're starting to accumulate, okay, open interest, an open interest on the options. So obviously, this is the S&P options okay, or the S&P futures and S&P options on futures, but we start to accumulate open interest on everything in this marketplace. And it just grows. And really specifically, when I start thinking about heavy amounts of open interest, okay, the SPX, the mother of all products, the longer you stay within a given range, okay, the more like that critical mass is going to grow. It's like a snowball, if you will, effect that it continues to grow. So what's the problem with it? And it's bad. By the way, it's amazing when you actually draw it like this. You're like, oh, you can't even see the chart. It's exactly my point, because the snowball is so big, okay, which you have to be careful of. And this is going to be a very much, and people don't like when I say this, but here's the truth behind every one of these volatility boxes that we've gone back and assessed. Okay, it's a binary exit to the volatility box, which basically means you're a coin flip away from exploding higher or exploding lower. We all want to sit here and, prognosticate as to what we're going to do when we come out of the box, but here's the one thing that you do know. When you come out of the volatility box, it's going to be done with violence in the marketplace. It's going to be done with a high degree of correlation. Why? Okay, when you come above or below the volatility box, there's this critical mass of gamma that has to be hedged. The way to basically say it is, okay, that snowball is absolutely huge. And if we start to sell off, the entire trading world will have to sell, okay, into selling. Basically meaning that they're going to have to trade in the dynamic of the marketplace. The same is true if we actually break to the upside. So through, some catalyst that comes out. And that's why I say, like, oh, we want to talk about which way we're going to come out of the box and everybody's a genius. Nobody's a genius. There's going to be some catalyst. And you can't predict the catalyst. It could be jobs this Friday. It could be another tweet. Nobody saw DeepSeek coming 2 weeks ago. Nobody saw, the tariffs coming, even though they were talking about tariffs. But some catalyst comes, we explode to the upside, and they're going to have to buy into buying. I say they, entire professional trading world. Okay, trades predominantly net neutral, which means they have to trade, okay, in the direction often of the marketplace. So just be aware. You start, getting. Let's really kind of highlight this. Start getting below like 5,900. You really want to pay attention. There's only a few breaches down below here, minimal breaches down below, okay, to the upside, just above like 6,100, very few breaches, okay, above that particular level. So when you come to the upper edge, and again, once again, I'm going to draw the box, okay, so everybody has a great feel for this, because I'm telling you, it is, if you will, the range that defines us all right now. If you come to the upper edge of the box, everybody starts to kind of freak out a little bit, just rightfully so. But I was saying this weekend, it doesn't matter whether we're up here or down here. Until we start to actually really crack and just go for it, you're going to see the marketplace explode higher, explode lower. One of the key features of coming out of that volatility box, and again, this is important, but one of the key features coming out of the volatility box would be higher degrees of correlation, which basically the marketplace is going to start screaming, like, holy crap, there's going to be 100 stocks to the upside or 100 stocks to the downside. And these are not easy things to deal with. It's a binary marketplace, which just basically means, you're a 0 or a 1. It's a heads or a tails coming out of the box. And that stuff gets wild. And as I said to you guys, like, look, that's the truth. Nobody wants to hear that it's a total binary outcome driven by some, exogenous kind of catalyst. Okay. Now, there are some interesting signs, though, over here right now. You have bonds, okay, that have got a bid back under them. For the record here, I want to make something clear. I got out of the rest of my bond positions today. I was long bonds. I'm now officially out. So I sold a bunch of bond puts. In fact, here's my entire history in my bonds just recently. But I had sold puts and bonds because I was going to get long bonds. Sold puts and bonds, bought those puts back profitably. Okay, I actually bought the bonds themselves. I bought bonds, back January 10th for 111 and 20 ticks. Just sold it out today at 116 and 4 ticks, pretty much where we're trading right now. Look, it is what it is. It's a nice profitability of about 5 grand, like on a one lot over there. So I'm not going to, not even going to think twice about having exited that position. So the bonds can be a pretty good indication. Question is though, right now, are the bonds rallying because we're starting to get defensive because we're going to sell off? Are the bonds rallying right now because maybe interest rates in the economy, the interest rates are getting lower because the economy is slipping a little bit? We'll get some more information on that front though. Specifically when the jobs number comes out on Friday. All right, digging a little bit deeper into this too, all you're really seeing in the marketplace, a lot of noise. 50-50 advanced decline lines, a slop fest. It's what I call, and again, I was talking about this in the weekend updates, the rotation game. Look, okay, this week we absolutely hate Microsoft, okay, but we're starting to love NVIDIA again, all right? We're starting to love a little bit of Broadcom, but we're hating on Google today. So it's a rotation game. All of a sudden, you love financials. Why do you love financials? Because you don't like NVIDIA. I mean, that's really what it kind of comes down to. This is part of the rotation game, and that's important, all right? So again, trying to give you really definitive ranges and kind of a feel for the marketplace. In that kind of volatility box, though, I don't want anybody to feel defeated, like, I don't know which way we're going to go when we come out of the box, okay? And people, that's fine. What you do in a time like this, you put on some in-out spreads, okay? And just the volatility in the marketplace alone, all right, just bouncing back and forth on a day-to-day basis is enough to see degrees of profitability. So, don't look at this as, this is futility. Right now is a trader's marketplace. It looks like it's going to be a trader's marketplace for a considerable period of time. So I can't handicap where we're going to be a week from now. I can't do it. Neither can anybody else. You can't tell me where we're going to be a week from now. You can't tell me where we're going to be a month from now. Okay. But you can look at the charts all you want. That's again, that range that kind of defines us all. But what I can tell you and what I can do, okay, I can trade through this. And we've had some great positions on lately, both bullish and bearish, because, one day you're completely wrong. The next day you're right. That's that's what volatility does. All right. Last but definitely not least, back to the SPX, the mother of all products. So as I said at the beginning of this video, massively unchanged on the week. We are. Go take a look at the QQQ. QQQ, its auto expected moves up listlessly on the week. There's nothing really going on. But what I do want to show you, so we're unchanged on the S&Ps, right? We already hit the lower edge of the expected move. Okay, it's a big boy expected move this week, over 80 bucks. But here's the interesting part. So you have the jobs number coming out, and that's obviously coming out on Friday morning. What's even more interesting about this, though, is you look at the marketplace and you're like, there's nothing going on. This market sucks. Right? Everybody's saying the same thing. And so am I. I'm like, there's nothing going on here. Got to record a video. This marketplace sucks. And then I looked over here and I go, holy beep. Yeah, I have to cut that part out of the video, right? Why is there still a $62, $62 expected move? Because people, that's the marketplace saying the crap could hit the fan at any moment. It sounds kind of humdrum when I'm like, oh yeah, it's defeating and there's this binary move, and then all of a sudden, holy crap, you still have $61 of movement and only 2 trading sessions left. How the hell is that possible? A whole week only had like 80 something dollars of movement and there's still $60 packed in. So allow me to say the proverbial crap can very well still hit the fan. You could easily snap that volatility box literally this week. Thanks everybody for joining us here at Theo Trade. Have a wonderful evening. Bye-bye.